Welcome to the show. This is the 2026 Housing Market Forecast and Prediction Podcast. Lots to get into, so let's get started.
How to Buy a Home educates, protects, and connects first-time homebuyers to qualified vetted realtors in their area. Whether you're looking for DIY information or step-by-step guidance, How to Buy a Home is the #1 resource for first-time homebuyers.
What is up, my How to Buy a Homies? I'm David Sidoni, and this is the annual end-of-the-year forecast and prediction podcast, the 2026 edition. Now, if you're new to the show, this isn't a typical how-to episode. This is going to be all stats, data, and all the economic analysis of the housing market as we prognosticate for 2026. If you're looking for all the first-time homebuyer how-to stuff, pause this podcast and jump to episode 400. That's where you're going to find the #1 trusted first-time homebuyer step-by-step system in the country. And if you're looking for specific topics, go to howtobuyahome.com, look for the podcast page, and look through the episode guide. Anything and everything you need is all right there. This year's forecast and prediction episode is dropping a little bit early because many economists are predicting that right now, I'm talking like today, actually like yesterday, said that we are smack dab in the middle of a buyer's window of opportunity, and it's likely only going to be open through winter, and it's going to go away in the spring. So I wanted to get this information to all the homies out there ASAP. Now, I've been in the research cave for weeks, and it's time that I get this out to you. This one's been intense. This data, it comes from last count, I think it was 155 housing analytics articles that I've read through. Not to mention 24 housing and economic data websites that I have been in deep research on. I've had 9 or 10 different webinars that I've attended and 4 in real life conferences that I traveled to on planes and trains. And that is on top of my daily routine. That's where I look at, 14 or 15 different daily industry economic publications, as well as real estate stuff. I look at video series and I review them every day, 7 days a week, 365. Not to mention the dozens of real estate and economic podcasts that I put in my ear holes. Yes, I live a super exciting celebrity lifestyle. I think my most recent night off, I watched K-pop Demon Hunters with my sophomore in high school. So the information you get here, it's getting direct from me and months of research. This is not an AI written or produced podcast. All me in all my real estate nerd glory. I've been scouring like crazy, looking for the first-time homebuyer information and advantages for you. I'm going to drop a bunch of different resources for you in the show notes. Use all the information here today to quiet the haters in your life. I know it's a really tough market right now. But the drama kings and the drama queens out there who are wrapped up in the fear of buying a home today, while I understand where they're coming from, I also don't want you to listen to them because unfortunately, emotions are not facts. So drop these facts on any of the skeptics that you encounter about home ownership, especially the skeptics of buying a home now or in 2026. Because when it comes to home ownership and the best time and the right time for you to buy, always consider the source that's giving you any kind of advice. So when the haters come at you or the people who think they're protecting you, but they're just really afraid, ask them how much research they've actually done and then compare that to what was done here today for this podcast that I made specifically for you. Ask them if they've been studying the real estate market for 20 years. Ask them if they've put out correct forecast and prediction episodes on a podcast for almost 7 years. Now, I don't say that to brag or pump myself up. I simply wanted to make sure that I demonstrated to you that I am here to make sure that you get the right information for you to succeed. Too many people are not succeeding because they're not getting the right data for them. I'm not leading with emotions. This is just facts, analytics, just like I've been doing here every year since 2019. So let's start with why are you here today? I know that many of you are listening to this specific episode because you're looking for predictions about the future so you can pick the exact perfect time for you to buy a home. You're looking for the most advantageous things that you can find. Cool. I get that. I feel you. So let me answer that question for all of you right away. None of the data that I've been looking at for months and months, none of it says that waiting or trying to time the market in 2026 is going to save you money or get you a better deal. The best time for a renter right now at the end of 2025 to buy a home, even in these tough, unaffordable times, was yesterday. And hey, if you want the math for all that, check out episode 355. It's the rent versus buy. Not to mention episode 388, the playbook. That's where we discuss the rent replacement strategy. Things are different now, and you have to have a strategy in place to really understand that waiting is not going to be the best way for you to get the quote-unquote best deal. And there's no sales pitch here. I'm not trying to take you out to show you homes this weekend to get a contract so I can pay my mortgage. I've just been giving the same educational information since I started the podcast. So if you're here and you're hoping that I give you some kind of magic dip date that's going to be coming in 2026, the deal is it's actually happening right now. That's why I'm doing this podcast early. It's happening now in November. And it's likely not to last once the snow thaws out. So I'm going to give you all the data, but in general, don't wait. And hey, I wish I had different data for you. I wish I could be telling you that we've got a correction or a crash coming. I would love to tell you that. But all the data is still showing different things happening next year. Actually, it's kind of showing that everything's going to be the same, but I'll get to that in a little bit. And if you're thinking that some of these things feel kind of illogical and unbelievable that prices could still rise, that's okay. That feeling is correct, but there's data to support why it's actually going to happen. In 2026, we're going to be looking at the same thing. In other episodes, I've explained in detail why this price raising has happened when it doesn't feel logical. It's the low inventory combined with a huge demand from the buyers. It's the basic supply and demand of it all. But there is one change that happened in the housing market in 2025, and it's going to continue into the beginning of 2026. The raising of the prices, it's actually slowed down a little bit, and it's even gone flat in some areas. And in some places, it's even dropped just a little bit. Now, that still doesn't change your specific math. The way for you to get the best deal, the way for you to make the most money and avoid losing the most money is to buy as soon as you can and start reaping the rewards of home ownership ASAP, getting out of the high rent rut. So if you're a regular listener and you've done step 1 in the 10 steps and you've decided that you believe in the positive numbers of the rent replacement strategy, ask yourself this question. Why did you come here today? What are you here to learn? Do you need to listen to the forecasts and predictions? I mean, there's plenty of other in-depth how-to information in the podcast library. And this episode, it's not going to give you a magic savings buying date when we talk about 2026. And if you want to learn, that's great. There's a bunch of stuff I'm going to tell you. But keep in mind, this data shouldn't change your plan. Because you're going to hear about, even though we've got a little bit of a change in the market right now, there's still giant pent-up demand. And combine that with a low inventory, and we expect that we're going to see things move a little bit next year. So sorry, gang, I'm not going to give you that perfect day. And I definitely am not going to give you that perfect day that lines up exactly with when your lease ends. It's time to get bigger thinking. Also, by the way, if you're wondering, hey, well, did I miss it then? When was the perfect date in 2025? Well, I actually reported and told you about it in previous podcasts. The date of the lowest interest rate with the best prices, that was in the week of October 21st to October 28th, before the Fed meeting when they cut the rate. That's when interest rates hit a 2-year low. The cool thing about that is, and the good news for you, is that today, for the average home, even though rates have picked up a little bit, it's only costing you $40 a month in your payment. So as we get into this podcast, as your first-time home buyer, biggest educator and champion, I do want to make sure I ask you this question with nothing but empathy and desire for you to find some sort of loophole to make this easier, but I don't think it's going to happen. What are you hoping to hear in this episode? I'm always going to shoot straight with you, but if you're looking for some magic window of opportunity, I'm letting you know it's happening right now. Now, every year I do these forecast and prediction podcasts, and I do them for 2 specific reasons. One, it's to verify that I'm not talking out of my butt, and to give you just a glimpse of the data that I research and I find and I give to you, the first-time home buyer, so that you can have the most optimum buying tools, resources, and strategies that works with the analysis and the data. And also, I want to make sure that we're staying on top of all the trends. And the second reason, I do this for all the skeptics who hear my mission and my message, because I totally understand. It has felt illogical since I started in 2019. And now that the market's shifting, maybe people are thinking, oh, it's even more of a reason that you should wait. No, this is where the facts back up the mission, because fear and misinformation have created what I believe to be the greatest economic crime committed against an entire generation of renters. That's what happened in 2025, where the average age of the first-time home buyer jumped to a crazy 40 years old. 40 years old, that's criminal. It's an entire generation has lost so much wealth due to a corrupt real estate industry that isn't looking out for your best interest, and they're working based on just pure greed and not letting you know that you can do better. You have options. You just haven't been told about them. What I'm going to do is give you all the data, but then I'm also going to make sure you understand the options. It's to tell you what you really need to know. And everything that you really need to know, I'm going to sum up in the next 30 seconds. The entire rest of this really long episode is truly not necessary for anyone who's renting in an average rent and looking to buy an average starter home. The math will work for you regardless of this hour or more of information that I'm going to give you. So here it is. Here's the full summary of 2 months of work of all the leading economists, their forecasts and predictions. The smartest and brightest minds, this is what they are predicting for next year. Prices, they're going to go up 2 to 4% next year. Interest rates are going to hover around 6%. The number of homes that get sold, they're thinking it's going to increase probably around 10%. And the housing inventory, the only stat that matters, is going to increase. But likely when it does, so will the number of buyers. And finally, the window of opportunity is right now. It's a slower time of year in winter. I'm talking from yesterday until the spring of 2026. For most of you, that's the information that you came here for. That's it. But as you could see, I got a lot more to say because I want to make sure that everyone hears everything that they want to know. And I want to make sure the skeptics know I'm not just talking out of my butt. I'm going to give you all the data that came behind these predictions from these economists. So if you stick around, here's your warning. It's going to be facts and data and analysis, and this is going to have some pretty dry areas, like Sahara Desert dry. Facts, numbers, data. At the end, I do have some very important red flag warnings about our friends at Zillow, along with my rage roast of an extremely popular social media realtor, and a whole bunch of exciting new incredible opportunities that are coming for home buyers. And I'll tell you all about that at the end. But in the meantime, there's going to be a lot of numbers. All right, here we go. We're going to start with the 2025 recap of the data, and then we're going to get into the 2026 forecasts and predictions. And then I told you at the end, I'm going to give you the bonus red flag warnings, as well as the big buyer opportunities coming your way. 2025 was different. It was the first time in over a decade, minus the 8 weeks of COVID, because that was just whatever. It's the first time in a decade that we saw a slowing of the home prices. Now, it doesn't mean that they dropped everywhere. It just meant that they were slower going up. It was a deceleration. And in many parts of the country, we even saw prices drop for the first time since most of you guys out there were in elementary school. So right now, many economists are calling this period that we're in right now, they're calling it the great stall of the housing market. I've been talking about this here on the podcast for the last couple of years, and now we've got the data to back it up and show that we have hit a definitive frozen market. Most of the economists, they do expect this to thaw out by spring, but one thing is sure, the great stall, frozen market, it is here. And when it's over, just like from 2019 to 2023, millions of Americans will wish that they had bought a home to catch the next wave of home appreciation. So let's take a moment and figure out what was going on with first-time home buyers this year. What was in their brains? I'll tell you what it was, fear. Fear happened in 2025. There was a huge drop in the number of first-time home buyers. The lowest number since first-timers were ever recorded by the National Association of Realtors. That started back in 1981. Here in 2025, first-time home buyers only made up 21% of the total number of home buyers. The average over the last 15 years has been 32%. That means over 500,000 less buyers than normal. First-time home buyers have bailed. Those who did buy, here's the breakdown. 32% have kids, 50% were married, 10% are single men, and 25% are single women. Yes, ladies, in 5 or 10 years, the scoreboard is going to reflect that you are the winners over the Bitcoin bros who are sitting around waiting for a housing crash. So that drop is super depressing, but what's even more depressing is that average age I told you about, 40 years old. I mean, for 20 years, the average age has been about 32. This is so just breaking my heart because it's totally based on fear, not math, not what's best for the average renter, not data, just fear and lack of information. Shannon McGann, the National Association of Realtors Executive Vice President and Chief Advocacy Officer, said this, quote, delayed or denied home ownership until age 40 instead of 30 can mean losing roughly $150,000 on equity on a typical starter home, unquote. Now, that fact right there, it's a gigantic factor why there's an entire generation growing up feeling like middle-class life is out of reach. Too few renters have been exposed to all the tools at their disposal to avoid this trap. In 2025, first-time homebuyer down payments, they went up a little bit too, from 8 or 9% to around 10% this year. Now, that matches the highest record since 1989. What was interesting is here at How to Buy a Home, we've had hundreds of homies who came in, got the correct information, got the real information on what they could do, worked with a specialized team to show them all their options. And we have hundreds and hundreds of stories of people who bought with 5% down, 3% down, and many even less than that. Here's some of the data for down payments. 59% said they got it from their personal savings. 26% said financial assets like 401ks and IRAs. And 22% said they got their down payment from gifts or loans from family or friends. And I also found another Gallup poll that said that roughly 1/3, it was like 30% of Americans who do not own a home right now, they don't think that they're going to buy one in the next 5 years. Oh, man, that is a verbal stabbing of my heart. And then 23% of people surveyed said that they don't think they're going to achieve home ownership in the next 10 years. Oof, that is like a grand piano just fell out of the sky and crushed my soul. This is criminal. And it's got to be corrected. Homies, buying a home is not impossible even right now. It's just not being taught how to do this in this new economy. One of the things that also came from the poll was that 68% of renters said that they are in their current housing because they can't afford to buy a home or they don't have enough money for a down payment. And I'm sure that 100% of them absolutely do not have all the correct information at their disposal for what they need for a down payment. You have more options than the general public or even the internet tells you. Be an innovator, get the right information, and get ahead of the game. I did find one cool glimmer of hope. 23% of millennial respondents said that they plan to buy a home in the next 6 months. That's a big increase because in September of 2024, that was only 15%. Fannie Mae's National Housing Survey revealed that most Americans think that mortgage rates and home prices are going to come down in the next 12 months. Oh boy, I think that's a lot of wishful thinking. There's a whole bunch of data here. Listen to that and see if you agree. Now, 2025 had some other interesting stuff. As we record this right now, we're like 4 or 5 days out of the government shutdown, which dropped a dump truck of ice cubes on top of what was already a frozen housing market. So we'll see what happens here now that it's done. What's interesting is a lot of the reports are showing that some home buyers are not deterred, even through the shutdown. Recently, purchase applications were up 6% compared to the previous week, marking their strongest weekly pace since September. Now, if you zoom out even further, it's an even bigger jump. Compared to the same week in 2024, home purchase applications increased 31%, making the strongest start to November for the housing market since 2022. All right, let's get into the big factors. First, we start with prices. Overall, over the last 5 years, we've seen home prices go up 54% since 2020. Now, moving forward for the next 5 years, it looks like that trend could be over. This big increase, it's really not expected because that kind of big boom, that happens after a major bust. And that bust, of course, was COVID. In 2025, home prices in the third quarter were actually up in 77% of the metro markets. That was 176 of 230 markets. But as we get into the fourth quarter, the freeze is on and we've seen a shift. Nearly 20% of the homes reduced their asking price in September. And a lot of that was in the lower and mid-tier sellers who were making the deepest cuts because they realized they had to do that to stay competitive as the market cooled off. Now, I've been reporting that here on the podcast for the last few months, that for the first time in decades, it's not the same housing market all across the country. This is different in 2025. As a country, the housing data, it is split like 50-50. In half of the country, home prices are still rising at a slower pace, but they're rising. And in another half of the country, we're seeing a slight decline in prices. So overall, if you're looking at everything, we're frozen. The most recent stat on the median sales price was $439,000. Now that is $6,000 or 1.3% off of the high in August. On a regional national basis, median home prices, they're all over the place. It was $540,000 in the Northeast, up 6%, $331,000 in the Midwest, up 4.2%, $372,800 in the South, that's up 0.5%, and $633,900 in the West, that's down 0.1%. Now, this next paragraph, it's a whole lot of numbers, and it might not mean anything to you, but anyone who understands real estate or studies this stuff like nerdy old me, this next paragraph, these next numbers, when all put together, they mean great news for buyers. Ready? Only 1/4 of the homes sold in September, 25.3%, got sold for more than their final list price. September's average sale to list price ratio, it was only at 98.6%. For much of 2025, nearly 1/3, 32.8% of the homes that went under contract, they did so within 2 weeks of being listed. But that's changing with the typical homes sitting on the market for 50 days before selling. That is the slowest autumn pace since 2016. That paragraph was a whole lot of numbers. When you put them all together and you interpret them from a realtor lens, that's buying market. And I got corroborated. I saw another article that said that fall 2025 could be the perfect storm, or as perfect as it's been in a while for buying opportunities. The article, I think it was Realtor.com, it crunched the numbers and proclaimed that right smack dab in the middle of the football season, right now, the property gods have aligned, resulting in more listings, lower prices, less competition. Homes.com concurred, stating that nearly 450,000 homes came on the market in September, 22% more than the same time last year. They said that the peak advantageous buying time is going to be November, and in states where it doesn't get snowy in December and January, warmer places like the southern and western states, they think it's going to continue there too. And according to another report, 38% of new home builders say that they have cut prices as of October. And many of them, we've seen it here, offering crazy incentives on their loans too. We're talking rates as low as 4.9% and even 3.9%. And one last thing on home prices. There are homes that were for sale that were taken off the market. And this has had an interesting effect on the way things are being priced right now. It's called delisting homes. And there were a bunch. Homes that went up for sale, taken off the market. When the seller didn't get the price that they wanted, it rose 52% in September. That's a gigantic number. The sellers, they've been watching this rising market for 5 years, and they finally decided that the summer 2025 is when they were going to do it. But then they ran into prices flattening for the first time in 13 years, and the sellers were just not prepped for it. Let me give you a little insider realtor information on what happened. Let's flash back a year ago. It's Thanksgiving 2024. A homeowner family discussed the multiple hundreds of thousands of dollars they've made on their home because they bought it, 2017, 2019. Well, now they've been floored by the high sale prices they're seeing for the homes in their own neighborhood. So they decide, you know what, we're going to sell the home in 2025. So they call a realtor, and in the new year they meet. They go over the pricing that they're going to do for the home at that time. And then they take a few months to get the home ready for sale. And then they put it off until the kids are out of school. And by the time they go on the market in July 2025, the housing market, that's already started to flatten. It's different that when they got this idea. So they think that they could sell their home right now for $50,000 more than the last home in the neighborhood sold. And they're not going to take any less than that, even though the market's no longer paying that to anyone selling a home. So when they don't get the number that they set 6 months ago, they delist their home and wait till next year. More on that when we get into the forecasts. Next up, what happened to interest rates in 2025? Now, I've been dropping updates on mortgage interest rates all year. We started at 7%, dropped to as low as 6.13%. That's the one I told you about back in October. And right now we're sitting at about 6.29, 6.3. We're going to get into what the economists predict and where they think they're going to go in a little bit. But I already told you at the top of the show, it's pretty much 6%. But let's talk about what that low interest rate did to affordability in 2025, because from the beginning of the year to the end of the year, we dropped a lot. The median monthly housing payments for Americans during the 4 weeks of October 26th, the median monthly housing payment for Americans during the 4 weeks ending October 26th, they fell 1.4% year over year. It dropped to $2,530. That's the most significant decline that we've seen in the mortgage housing payment since November of 2024. And the interesting thing is that happened even with a 1.9% increase in the price of the home. Mathematically, that doesn't make sense unless you pull back and realize that the difference in rate right there really changed things. And again, this year's low of 6.13%, I reported it was going to happen on the podcast before it actually did happen. And I reported the exact same thing back in 2024 when we had the same drop to the low for that year before the Fed cut their rate. Yeah, I'm a super real estate nerd. Okay, next factor, home sales. The total number of existing home sales. We're not done for 2025, but they're forecasting it to land about 4.06 million homes sold, with another 800,000 homes forecast to be purchased. Those are the new builds. So those numbers together, that's about 1 million short of the normal market levels. Not a great year for home sales. All right, now we're going into the next factor, inventory. Homies, hear me now. Inventory is everything, 100%. Inventory is the one and only stat that matters. Inventory is the one economic factor that controls the entire housing market right now. All the rest of the data, it means nothing. The housing market reacts to this factor, inventory, period, the end, curtain. And you know what? I can bet that 95% of you listening to this, that you are looking to get positive information about home prices and interest rates, because most people assume that's what's going to affect and change affordability. Those two factors are a distant second compared to understanding where we are with the housing inventory, which of course ultimately affects supply and demand, which has much more effect on home prices than interest rates ever will. So listeners out there, you got me in your ear holes right now because you're curious about where the market is heading. So to know that, you have to make sure that you're looking at the factors that are going to affect things the most. So it's inventory. Just this. I've been talking about low inventory since I started the podcast in 2019. I've broken it down for the listeners multiple different times a year. There's a whole bunch of data as to why this has happened. I'll give you the very, very brief thumbnail right now. Since 2012, we've been 4 to 6 million homes short for what we need. And of course, population's been growing and we need even more as we're at 2025. But 4 to 6 million homes short starting back in 2012, right now, that means the demand is always more than the supply. And this is the only reason that prices keep going up. Forget wondering about everything else. This is all that matters. And if it looks like we're getting to a point where the inventory starts to change or the demand really drops off, I will let you know when that changes. For the last 2 years, 70% of the home buyers said that maybe they were putting their plans on hold. That means that pent-up demand is enormous. We've got buyers waiting to flood the market, and even the first hint of prices starting to slow down a little bit. And it's happening right now. That means we're going to have giant demand, but we're still going to have low supply. Economics 101, supply and demand. That means we're going to have a rush on things in the beginning of next year. And I can tell you this, when it comes to the inventory statistic, even if 1 million homes dropped on the market tomorrow, I don't care how it happened. If some builder waved a magic wand and it happened, or 1 million sellers decided to put their homes on the market, or 1 million people stopped making their payments and their homes got foreclosed on, there would still be plenty of buyers to scoop all those up. That's why the inventory matters. Even if something catastrophic happens, like the worst of the worst, we still have so many buyers in waiting that the very worst we'd see is a correction, not a crash. And most people that predict the demand for 2026, they think it's going to continue and it's still going to be more than the supply. Thus, That means prices will be at least holding steady. And when we get into the big months when everyone comes out, probably increasing. Now, we dig deep into this right now. Here at the end of 2025, there's some inventory sitting on the market, but for how long? Low inventory, it's everything. And that's why I've been talking about the window of opportunity right now. It's rare that you see homes sitting. And the reason you're seeing that right now is because inventory, it is definitely regional. That market split in half, inventory is a big part of that. So even though I just said that it's regional and that's what's so different in 2025, I am going to give you the one statistic that realtors and housing analysts use to describe the housing inventory. Now, this is for the entire country. They describe it in months of supply. Frankly, I am not a fan of this statistic. And it's not because it's inaccurate. I just think it's lame. I think it's stupid and confusing, this metric that doesn't mean anything to the consumer. What does month supply mean? But you know what? Let me explain it to you, and then I'll give you the numbers. The months of inventory statistic, it's based on the equation that you take the current number of homes on the market, and then you figure out how many months based on the demand would it take to buy all of those homes. Now, so then you're going to get 2 months, 5 months, 10 months, whatever. The dividing line between a buyer's and seller's market is 6 months. Below 6 months, that's a seller's market. And if it's above 6 months, that's a buyer's market, more inventory. Now, in 2021, we were at 2.6 months, the lowest since 1952 when we started keeping the records. That's when you heard about 25, 30, 40, 50 offers on homes. It was an insane seller's market. So that was 2.6, way below 6 months. Right now, 2025, we're at 4.7 months. So it's not technically a buyer's market, but as I mentioned, there's a huge disparity. Half the country one way and half the country other. So you might be in a place where your specific town has 8, 9, 10, 11 months of inventory, which means buyer's market. Now, here's some other stuff that's going on with inventory. In many regions, the sellers aren't selling, and that's keeping the inventory low. We're 2 years into homeowners feeling locked in because they're sitting there with a 3% interest rate. They don't want to sell and get another higher rate. People call it the golden handcuffs for the homeowners. And the recent data here, October, November, it shows those golden handcuffs are tight. And here's a big story that not a lot of people are reporting. And millennials, I hate to be the one to tell you this, but the boomers are screwing you again. Yeah, have you ever heard of the silver tsunami? This was huge in the world of real estate. It was a gigantic topic of discussion in 2020 and 21, 22, because in 2020, the U.S. Census reported that 1 in 6 people in America were 65 years old or over. And many realtors and economists thought that this would be the answer to the prayers for the low housing inventory, that these retired boomers would sell their homes and put a slew of new homes on the market. Well, it hasn't happened. In fact, data from the AARP stated that 51% of people over 50 years old, that group now owns 70% of the U.S. homes. And they were hoping they were going to downsize. But the survey says, oh, sorry, that's a strike for the first-time homebuyer family. 65% of boomers right now are saying that they like their home and have no reason to move. Damn it, boomers. This new data suggests that these old timers, they're perfectly fine just staying put. They don't care about cashing out. What we did find out is they're concerned with different things now, post-COVID. They're thinking about their personal happiness, like having a special place for all of their collectibles and heavy furniture, or having space to do hobbies. They want garages and bonus rooms and side yards and gardens, spaces for the RVs and the boats. They want that big old house. 65% of them said they're going to stay put. And most importantly, they are really not digging the idea of selling to move into some senior community with other people telling them what to do. I also am not saying that boomers are cheap, but no one counted on the golden handcuffs happening. And so for many of these, we'll call them frugal boomers. They just think, you know what, forget that. It is too expensive to move than to stay right here in my current home. So we're staying put. It's been a thing post-pandemic. Boomers are digging staying where they are. And a big part of that is, after COVID, a lot of people were looking into healthcare and healthcare prices. It's gotten out of control and it's traumatized them. So a lot of people don't want to lose the security of their home. And then here's another part that might not be so great for first-time home buyers. For those that actually do decide to move, well, hey, millennials and Gen Z, boomers are going to screw you again, because guess what they want to buy when they downsize? They want to buy the starter homes that you're looking at. And yeah, they're going to be coming in all cash. Oh, and the last thing about the silver tsunami, they're living longer too. So those homes are moving at a much slower pace than everyone thought. Okay, so that's 2025, and those are the four big housing stats for the year. You got prices, interest rates, sales, and inventory. The big factor for 2025, the one that we can deduce is, you know what? This year was a total trip. Calling it unique would be an understatement. We got a 50-50 split, and everyone's trying to figure out where we're going next. And in my research, I found a bunch of other stuff. Here's some other very, very unique things that happened this year. For the first time since 2016, America's homeowner population, it's ticked downward. We're down to only 86.2 million households. That's according to the U.S. Census data. The decline is very, very slight, but significant, since it's the first such decline in nearly a decade. And at the same time, the number of renter households grew by 2.6% to roughly 46.4 million. And here's another interesting end of 2025 stat. There's an estimated 72.3 more condo sellers than buyers right now. Country, it's 108,945 more nationwide. That's the strongest buyer's market for condo since records dating back to 2013, with the exception, of course, of April 2020, when y'all know what happened. And what I love when I'm doing research like this is you have to look at all these different data points to really go, oh, what's going on with that? Is that really happening? Yeah. Investors, they're not buying condos anymore. Instead, they're actually selling the ones that they own. U.S. condo purchases by investors, it dropped 13% in 2025. Now, that's big. And if you're wondering why, here's a bunch of research that I've been doing for the last couple of years, actually more than that, because there's been some interesting things happening with condos. They're great purchases, but they kind of got a little overinflated in 2020 and 2021 because HOAs, they've started to change their rules. Regulations are changing. It happened a lot after the 2021 Surfside condo collapse, that terrible tragedy in Florida when it fell down. And in California, we're also seeing new requirements because they've figured out that a lot of the balconies are not actually in a safe condition. So that means new inspections, new HOA fees, and sometimes even triggering what they call a special assessment. And another just off-the-chart stat for 2025. This one was bonkers when I heard it. And for the skeptics out there, the, crash bros, this is not 2008. Right now, homeowners in the United States have $35 trillion in equity. That's trillion with a T. And the owners with a mortgage, they've got an average amount of equity. That's the profit if they sold their home right now of $300,000. Yeah, remember that 54% we had since COVID? That's really giving people a lot of equity. A lot of people, those silver tsunami people, those boomers staying in their home, 40% of homeowners have no mortgage on their homes at all. If you're freaking out about a crash, this is going to quell any housing crash. We've never had people with this much equity. Prices could drop significantly, and we would never see a flood of foreclosures. I mean, you can talk about golden handcuffs keeping people from selling, but should things dip a little bit or even a lot, there are a ton of homeowners out there who have a golden parachute of equity that's going to give them options. Another new 2025 factor that we saw in housing was rising prices due to insurance. Now, and that had a lot to do with natural disasters and climate issues. 26.1% of the United States homes, which represent $12.7 trillion in property values, they're vulnerable to at least one type of severe or extreme climate risk, like flooding, wildfires, hurricanes, all that stuff, especially in Florida, California, Texas, and Midwest flood states. And how much extra this costs you, that's going to depend on where you live. I'm a California resident, and I've seen things go bananas here. But I've read places that over the last 6 years, there's been, in general, over 40% increase in insurance prices. And pretty much like everything else when you're a first-time home buyer, the numbers, if you just read the headlines, are super scary. But we've seen plenty of first-time home buyers with the right team purchase a home and get it fully insured. And we're talking from like 200,000 all the way up to $1 million plus. All right, now we get into the regional information. This is where 2025 got crazy. By the way, what the hell are you still doing here? You're crazy. This is ridiculous. Okay, essentially the United States housing market is split in two. Half buyer's market, half seller's market. So when you read any stories or newses on housing, the info on average home sales or average home prices, it doesn't mean squat for anybody. You got to figure out where you are. This is new. We haven't seen this in over 20 years, and it's a big reason there is so much fear with aspiring home buyers. Because when you look at the data, it's contradictory and confusing. I mean, let's face it, as humans, we fear the unknown. And right now, it's majorly unknown in housing because all this is new for everybody, and it's pretty tough to wrap your brain around. Before I give you what's going on in your area, remember this. It doesn't matter what is happening in your region. Bear in mind, I've already done the math for you guys. I've been doing it for 20 years. And all the areas of the country, no matter what's happening, if you pay the average rent, the math works in your favor. Check out episode 355, Rent versus Buy. It's got all the details. The great news is there's a flat market this window. The opportunity's there. And it doesn't matter if you're in a section of the country where things are still a little bit unaffordable or way unaffordable, or if you're a place where there's things looking good for buyers. In general, the anticipation is that things are going to go up in next spring, so getting in as soon as you can, that's the best for you. Here's the numbers. Nationwide right now, only in this little window of opportunity, there's an estimated 37% more sellers than buyers. That is a near record gap. There are 7 metro areas where sellers outnumber buyers by at least 2 to 1. A lot of those are happening. I think all of them except one are in Texas or Florida. I'll give you the rest in a little bit. Hang on. There are 5 remaining sellers markets. The strongest sellers market right now, that's New Jersey. And Austin is the strongest buyers market with an estimated 130% more sellers than buyers in September of 2025. I have a couple of unicorns up there and I reached out to them. One of them said, dude, the deals I've been getting are beyond insane. He saw rate buy downs between 4.2 and 4.5% on 30-year fixed mortgages. And the other one said huge discounts. The prices they're seeing are insane. So overall, 31 of the 45 most populous metro areas were buyers markets in September. Here's the full breakdown. You ready? Austin, Texas, buyers market 130% with sellers for buyers. Fort Lauderdale, Florida, buyers market 118.5% more sellers than buyers. Miami, buyers 112%. Nashville, buyers 109%. San Antonio, 109% buyers. Dallas, buyer's market, 100% more. Jacksonville, buyer's market, 96% more. Vegas, buyer's market, 89.6% more. Houston, buyer's market, 83.8% more. Tampa, buyer's market, 83. Charlotte, buyer's market, 75. Fort Worth, buyer's market, 68.2. Phoenix, buyer's market, 60.8. Orlando, buyer's market, 59.5. Riverside, buyer's market, 57.9. That's Riverside, California, if you don't know. I'm a local. Denver, buyer's market, 55. Atlanta, buyer's market, 52. Detroit, buyers, 42. LA, buyers, 39. Portland, buyers, 38. Pittsburgh, buyers, 37. Sacramento, buyers, 33. Then we got Cincy at 30% more. Columbus at 26% more. Indianapolis, 24% more sellers than buyers. Seattle, 21%. Virginia Beach, 19%. San Diego, buyer's market, 18.9%. Oakland buyer's market, 14.6%. Philadelphia, 11.8%. San Francisco, 10.2%. Boston, balanced market. That's the first one. This one says it's at 9.4% more sellers than buyers. Kansas City, balanced with only 6.1% sellers more than buyers. San Jose, balanced market, 2.8% more sellers than buyers. Providence, Rhode Island, balanced, 2.1%. Baltimore, Maryland, balanced, 1.9%. St. Louis, balanced, 0.03%. New York, balanced with 3.7 less sellers than buyers. Chicago, still balanced, only 4.9% less sellers than buyers. Minneapolis, still balanced with only 5.7 less sellers than buyers. Milwaukee is a balanced market with 9.8 less sellers than buyers. And then we get into the sellers market. Cleveland, Ohio shows 11% with sellers less than buyers. Montgomery at 29%. The other way, Nassau County That's at 39%. And finally, Newark, which we told you, 41% less sellers than the buyers. So as you can see, we've got some wildly different data from city to city, from suburb to suburb, from region to region, which means that now more than ever, there's enough conflicting data that anyone can cherry pick factual statistics because there's conflicting data all over the place. And then they could win an argument for either side, buyer's market or seller's market. There are some real estate insiders that are saying that we're in a housing recession right now. I recently heard that from the Treasury Secretary. But overall, it's impossible to say that because everything's different everywhere. Any national predictions or national analysis, it's freaking useless. You need your local intel. And then, of course, you got to combine that with your own personal rent replacement strategy and your math to figure out what's best for you. Let's discuss the giant economic elephant in the room. It's been plaguing us for years, and it really got talked a lot in 2025. Inflation. Forget the current inflation numbers. Here's what's going on with inflation. Because if you look at the current inflation numbers, it's going to say that, it's not so bad. We're like CPI around 3%, and the Fed wants it around 2%. So it's going down. We're doing good. Inflation's over. Yeah, not so much. Because here's what happened. The inflation that is making us all feel just crushed and our savings low and everything else that's so expensive, it's cumulative inflation that we've endured for the last 4 years. The peak in June of 2022, that CPI had inflation at 9.1%. That was the highest level since 1981. During those years when inflation was at 7, 8, and 9% in those post-COVID time, even if you got a 3% pay bump, you were actually losing money every single year. So sure, today, maybe inflation's, I don't know what it is right now, 2.5%, 3%, because I don't know when you're going to hear this. That might feel like it's normal and in line with what they want because they assume that you're going to have an average 3% wage hike. Those high years, 7, 8, 9%, those increases in prices are still on the books and it's killing our buying power. See, that huge spike lasts for years and companies had to raise their prices on their goods. And it's not like they've gone back and lowered their prices when inflation started dropping this year. Restaurants are not relaminating their menus to put back their old prices and change the cost of everything. No, the cost of living, it's set, and it's set higher than what we made in our wages over the last few years. And this is not going to change. The companies have the new prices, and those prices are fixed. They're not going anywhere. And for you, the only thing that you can fix as a consumer is your home payment. It's inflation proof. It's the one that you pay every single month, and you can actually lock it in to fight any future rising of inflation. This fact about using your home as leverage against inflation, it is crucial for first-time home buyers who, especially right now, are feeling the inflation pinch because home ownership is the one and only expense you can set in stone. Not to mention, it's also the most expensive monthly expense you have. So how do you fight inflation? You fix your costliest bill. This could be something important for you because as I record this right now, the jury is still out on what's going to be happening with future inflation because the full effects of the tariff policies, it's still unknown. In general, the average consumer has yet to see any change. Things drop in prices based on what's been going on with the tariffs. And there are some economists that predict that the tariff effect could actually increase the now almost under control inflation, putting us back in a place where it's out of control. I read an awesome article that kind of explains how this all works. It's a specific type of economy that's been talked about before, and it's where we stand as a country right now. It's called a K-shaped economy. What that means is when a big economic shock hits, which for us was COVID, coming out of it, they do everything they can to get us to recover. But instead of everyone recovering together, half the economy shoots upward while the other half falls behind and goes down. It's like the two legs of the K. Top leg rises. That's the wealthier, booming sectors of right now. That's probably a lot of the people in AI or finance or biotech. And the bottom leg, the one that's going down in a K, that's the workers. And a lot of them right now are dealing with stalled wages, stalled hiring, and of course, the higher price of goods due to inflation. So some economists are saying that right now, there's enough data with everything that's happening with the lower leg to say that as a whole, we're in a recession. They're looking at historic credit card debt that we see right now. There's a recent increase that has just happened where car loans are reporting more late payments than normal. There was an article about Chipotle and a bunch of other fast food places going down. I think Chipotle's down 49% this year. There is slow job growth. There's student loan burdens. There's wage stagnation. There's another interesting story that China, who used to own a whole bunch of U.S. bonds because they believed in our dollar, they've been dumping $500 billion in U.S. bonds over the last few years, and they're buying gold instead. That's something that maybe could be kind of telling. And then just recently, in the last week or two, while we've been having the government shutdown, there's a bunch of major companies that have been laying off tens of thousands of employees each, like Amazon, Comcast, Microsoft, Target, UPS, Ford, Nestle, Meta. That's just a few of the ones. So when it comes to forecasts and predictions, people are thinking, what if a recession happens? That's going to change everything. Okay, let's go back and give you the history. In the last 6 recessions, home prices went up 4 out of 6 times. And each time mortgage rates, they actually went down. So this is myth-busting time. An economic recession does not mean a definite decrease in home prices. Here's the data. There was a recession in 1980, and that's because inflation was like at 13%. But that year, during the recession of 1980, mortgage interest rates dropped 4.2%. Yeah, it was 4.25%. They had a long way to go because interest rates, they were at 15%. But what's crazy is while that happened, while inflation was high, while interest rates were crazy high, that recession hit that first year in 1980 and home prices went up 6.1%. The next year, 1981, that was the next recession. It was that bad back then. They had to just split it up year by year. Inflation hit 18% in 1981. And at that time, mortgage rates dropped another 5% and home prices increased 3.5%. Now, things might get tough for us, but I don't think we're anywhere near those numbers. The next recession, back in 1991, interest rates dropped 2.25%, and home prices, they did drop, but only 1.9%. Next recession, 2001, rates dropped 0.63%, but home prices, they went up 6.6%. Now, the next one in these 6, that was 2008. Now, this is the absolute exception because the housing prices dropped because that entire recession was caused by the housing market and the mortgage meltdown. So rates dropped 1.13%, but prices dropped like almost 20%. That's not going to happen again because there are new standards for lending money to buy a home and everything that happened behind the scenes where the housing market and the mortgage buying back, that's what actually crunched our economy. That's not going to happen. But what that crash did do was that's what caused our massive depletion of inventory, the one that we're still dealing with today, which is why today, even though homes are at their most expensive, there's a potential that we could continue to see bidding wars everywhere next year. And if you're going, how could that happen, David? Well, they're still happening right now in half the country. And the final recession, 2020, interest rates dropped 1%, but home prices rose 6%. Can you imagine that? During COVID, home prices went up. So if the economy tanks a little bit today, we have historical data to show that during a recession, home prices don't always go down. And we also have this very specific piece of information that's happening right now, the giant disparity in supply and demand. The 4 to 6 million homes that we're short combined with all this data, that lets you know that if an economic downturn does happen, the odds are that you're going to get a home at some giant discount. So check the data and get ready to move. Always make sure you check the data. All right. Damn, 2025. That was a lot. But as we wrap up where we are today, the reason we do that is you can't really understand what the predictions and the forecasts, what they're trying to tell you is going to happen unless you understand where we are right now and where we've been over the last few months, because that's going to dictate where we go next. So as we head into the next section, forecasts and predictions, I want to let you know, of course, I obviously can't see the future. Nobody knows what's going to happen for sure. So this is all just me reporting the data from everybody else. And most importantly, for this time of year, we are in a very unique and strange market, 50-50. Haven't seen this in decades. It's bewildering right now. So before we get into the forecasts and predictions, let me offer you 2 things. 1, all these forecasts, this come from the leading economic minds who cover this crap full time. I swear to all things holy, I have never spent more time researching a podcast to get you information than I did for this one. I have been all up in this crap for months. I think if you total it up, I've probably done like more than 2 full work weeks on this. Like maybe, I don't know, like 80, 90 hours. I'm looking at everything out there to try to make sense of what's to come. And what I discovered listening to the greatest minds who analyze the housing market is the answers are boring. They're non-dramatic. They're vanilla. Nobody's predicting any big changes. But of course, the fact that everyone keeps saying things are pent up and people are waiting makes me think that it could just be one little thing that could flip the switch and suddenly everyone's out there. And of course, that leads me to the second thing that I want to make sure that you're taking from all the economists and the analysis for the future. There's one thing that they don't ever talk about. They don't see landlords rolling back rent prices. So even though you might not make that 54% that everyone made over the last 5 years for hundreds of thousands of dollars in appreciation, you will save tens of thousands of dollars every single year that you fix and stabilize your highest monthly bill. And there are a lot of options for you to do that much cheaper than you're being told. So you can do this sooner than you think, even in this market. And look, I'm not trying to sell you a home this weekend. Guys, I've just been doing this over and over again every year. And I understand that it doesn't sound logical. And I understand you're not hearing this from anyone else. And if you do, you feel like they're pushing you into a sale. Just go back, listen to everything I've ever said. You're right, the data doesn't make sense. But when you look at the low inventory, there's a reason why things are moving the way they're moving. All right, let's get into the forecasts. I wish I had something exciting to tell you, but the last 2 years pretty much suck for first-time home buyers, and they're not looking at a big change. So instead of looking at the market to actually make things better for you, it's better for you to look at what can I do on my side to be proactive to get all the options. We've seen a ton of people come through here that figured out their options and bought. And I can tell you, even though it wasn't the quote unquote best time to buy a home, they're in way better financial shape today. So first up, prices. Now, usually in this section, when I look at all the data, it's pretty interesting because there's usually at least some bold predictions made by the economists, both on the positive side and the negative side, the up and the down. But welcome to 2026. Man, it was a big, plain scoop of vanilla ice cream. Everybody was in 2 to 4% increase. That was it. No 12% up, no 10% down, just boring, slow prices crawling up. Now, again, I'm not really sure if that's necessarily going to happen. I think there could be a chance things get higher than that because that spring thaw, things might go. Here's what they're saying. They're saying the National Association of Realtors said 4%. Fannie Mae is forecasting 3.6% price increase. Zillow originally predicted 0.4%, but they've now raised that to 1.2%. Among the 250 most populous areas in all the country, Zillow expects these places to have the biggest price declines. Houma, Louisiana at 7.9%, Lake Charles, Louisiana at 7.5%, Lafayette, Louisiana at 5.3%. Damn, things are rough in Louisiana. New Orleans at 4.8%, Beaumont, Texas at 4.5%, Shreveport at 4.5% down, Corpus Christi at 3.2% down, San Francisco, hey, California, of course we made prices going down because our prices went way too high up. They're thinking San Francisco is going to go down 3%. They think Santa Rosa is going to go down. That's California as well, 2.7%. And Monroe, Louisiana at 2.7%. Now, among the 250 most populous areas, these are the ones they think they're going to see the strongest gains. Atlantic City, New Jersey at 4.7%. Torrington, Connecticut, 4.7%. Saginaw, Michigan, 4.6%. Rockford, Illinois, 4.3%. Kingston, New York, 4.3%. Knoxville, Tennessee, 4.2%. That town's hot. Hartford, I mean, like hot in terms of real estate, not anything else weird. Hartford, Connecticut, 4.1%. New Haven, Connecticut, 4%. Hilton Head Island, South Carolina, that's at 4%. And Fayetteville, Arkansas, 3.9%. Now, those places, you definitely want to jump on things here in this winter time period because it sounds to me like prices are going to go up. Of course, that's just what Zillow says, but who knows? So in general, all these economists are saying that it's going to keep going up, but it's going to decelerate. It's going to be a lot slower. But some economists are saying, hey, that's great for the market, including this guy who the freaking title for this guy is ridiculous. He's got to be the smartest guy in the whole world or have the world's biggest business card. Nicholas Godek, CFA, CAIA, CIMP, head of fixed income tradables and commodities at S&P Dow Jones Indices. Woo! Whoever that dude is, he said this, quote, "The era of the 15 to 20% annual home price jumps is over. The housing market's post-boom era is one of stability over sizzle. A shift might feel disappointing to sellers that were looking at huge gains, but ultimately it creates a more balanced and resilient foundation for the future," unquote. Thank you, Nicholas, with the long title. He said balance is good. And we're not looking at a correction or a crash. We're looking at balance. Now there's more information on how long and slow and steady this is going to last. And we'll discuss that when we get into the inventory. But next up, interest rates. Now, this is the one everyone wanted me to do 30 minutes on. Ready? Here's everything that everyone predicted for interest rates. The Mortgage Bankers Association predict we're going to be at 6.4%. Wells Fargo predicted 6.25%. Lawrence Yun from the National Association of Realtors is predicting 6%. Fannie Mae is predicting 5.9%. And Barry Habib, the CEO of the MBS Highway, he predicts 5.5 to 5.7%. That's it, gang. End of interest rates. No, I wish I had more data for you. I read so many different articles. People were trying to figure out what's going on. We got the 10-year Treasury yield. They're hoping that it drops below 4%, but a lot of people don't think that's going to happen. They're looking at the spread between the mortgage interest rate and the 10-year Treasury bond. If you don't understand all that, oh my God, everyone's been talking about all year long. But when you put their feet to the fire, all they say is, yeah, probably going to be around 6% next year. There was the chief economist at the Mortgage Bankers Association. His name is Mike Frattitoni. He tempered optimism about the outlook for next year, noting that there are some broader economic things facing some wild cards for next year. There's unpredictable trade policies, shakier job picture, softening in the global economy. He cautioned that persistent inflation and budget deficit concerns, they're going to prevent the long-term rates from falling substantially. He said, quote, "While inflation is still the Fed's target, the job market has weakened, and we expect the committee is going to continue to focus more on its full employment goal," unquote. Frattitoni was one of the guys that warned that these tariffs, that they're creating uncertainty and it could change things a bit. Truly, that's the most information we've got for predictions for next year because it's a scoop of vanilla. It's probably around 6%. Now, while I was in my research cave, I was eating beef jerky and trail mix and growing a beard. I did run into this cool positive article. Consumers right now are less worried about interest rates in connection to home buying. Yes, How to Buy a Home revolution is spreading. Interest rates, they don't define your purchasing power. They don't define affordability for you because you're paying high rent and you're looking at a rent replacement strategy and that math always wins. And especially since rates aren't going to move that much, it's not going to matter in 2026. That's awesome to hear. The latest survey by the University of Michigan found that the number of consumers mentioning high interest rates as it related to poor buying conditions for homes, it's fallen 10% in 2 months to a little over only 40% of respondents. Yes, people, say it with me. Mortgage interest rates do not define my buying. Okay, next up, let's talk about sales. Not anything that really matters to you, but seeing how many homes transact throughout a year, it can be kind of important for us to see what's going to be happening. Fannie Mae economists, they're predicting 10% growth, up to 4.4 existing home sales and new homes picking up 7% to 700,000 sales. The MBA, the Mortgage Bankers Association, they predict that we're going to grow 5% next year to 4.3 million homes, with new home sales climbing 7% to that 700,000. Now, I could go on and on with what everyone else said, but it's pretty much the same ballpark. Most people think in general that we're going to see a 10% increase in home sales next year. This flat market, this stalled market, this frozen market, people think we're going to bust out of it, but not skyrocket. Okay, next prediction point, inventory. Now, I told you about their lame month supply statistic that realtors use. There's not a lot of people that actually forecast what we're going to be doing with our inventory. So there's not a lot of predictions, but I did find a really good data point. So remember that huge rise that we saw in 2025 in people delisting their homes, putting them up, and then taking them off the market when they didn't get the price that they wanted? Well, a recent poll of those people, it showed that 82% of them said they're going to put their homes back on the market in the spring. So that's a good data point. And here's another good economic thing to consider. It's a great article I read. Here's the thing about when we're in a flat, frozen, inflation-bound, kind of stuck economy. When those things happen, it keeps people from buying the extras, from buying stocks, from buying cars, from buying luxury stuff. But eventually, when it comes to your home, life happens. And sometimes you just gotta sell and move. You got new jobs, new partners, maybe a newly single person. That happens. Or you could have engagements, marriages, pregnancies, all the stuff that happens. And homeowners, yeah, they might feel like they got the golden handcuffs, 3 or 4% interest rate, and they don't want to move. But we're going on 2 years of people looking at high interest rates and not moving because of that. And so a lot of them, they are really pent up and ready to go. And you know what? Some of them, they might need to move. Life happens. And we're already seeing data that this is happening. During the second quarter of 2025, the share of mortgaged homeowners who had an interest rate of 6%, it rose to almost 20%, 19.7%. That's the highest level of people with a home with a mortgage above 6% since 2015. And a lot of economists think, hey, that was kind of the beginning of the lock-in golden handcuff thing maybe ending. And right now, there's only 20.4% of the homeowners who have a mortgage below 3%. That leaves a whole lot of people with a mortgage at that 4 to 5.9%. And if they're looking at 6%, they've been eyeing that for 2 years now. And they might be thinking, you know what? That's not that much difference. The golden handcuffs they're wearing, they're starting to lose their shine a little bit. And the head of economic research at Redfin, Chen Zhao, said this, quote, "More homeowners are deciding it's worth moving, even if it means giving up a lower mortgage interest rate. Life doesn't stand still. People get new jobs, grow their families, downsize after retirement, or they simply want to live in a different neighborhood," unquote. When it comes to inventory, I'm hearing two different things right now. I'm hearing a lot of people saying recession, recession, recession. It's hard to tell what's political and what's actually real. We had the government shut down, then we had all those people lose their jobs. And it's getting a little weird. But the housing data, this data that has been totally illogical to me over the years, it just feels like there is a big potential for inventory to increase in the spring, which is going to pull out all the buyers. It feels like there's a potential for giant pent-up demand. But we'll keep an eye on it, and we'll let you know what happens. The one thing I can tell you, if you do wait for the spring and you have an opportunity to buy before that, you're probably going to run into a bunch of other eager buyers just like you, and you'll have some competition later on. Now, if you still need more data to corroborate the expectations for next year, I will let you know I read like 30, 35 articles with titles that said, hey, housing crash bros, you're wrong again. The crash isn't going to happen. And that's all because of this inventory. And there was one headline I saw from November 6th that was probably the most insightful. It said this: real estate investors, and this is in November, are paying 35% above the median sales price. So what that means is even though home sales were declining in November, and even though things were starting to flatten, investor purchases only fell off by 2.7%. Tim Lawler, the CFO at real estate investing lender Kiavi, he told Yahoo Finance, quote, "We don't anticipate housing prices or rates to dramatically decline anytime soon. Those wanting to invest in properties likely won't see a significant benefit to waiting. Taking advantage of the current market could be a good idea. There's no telling how long it will last," unquote. So gang, investors are the ones who study the market, and they don't overpay 35% above the median prices unless they see a rising market coming. And there are some economists predicting, this was an article from November 9th, a boomsday. It's a little bit hyperbolic, but basically a boomsday is the opposite of a doomsday. It's the pent-up demand making a turning point. It's the surge after the stall. And the article talks about all the things we're talking about: locked in sellers, frustrated and confused buyers, and builders not keeping up with enough homes. And the number of homes being sold right now, we're at 30 years low, but there is a gigantic desire to move. And so we're not in a broken market. We're just in a bottleneck market. And in the article, they said if rates ease up even just a little bit, things are going to explode. That's a boomsday. And you know what? No matter what you're doing, if you can't buy now, if you're waiting and you might need to buy during a boomsday, all the more reason to start preparing now. You need to have as many ducks as you can in a row so that you can win in a competitive market. All right. And speaking of getting prepared, let me give you some amazing information. Oh my gosh, you're still here. Once again, congratulations for, I don't know what your deal is. I don't know. Are you trying to punish yourself for something you did? Anyway, we're going to keep going. And I've got a couple, well, actually more than a couple, some really good opportunities for first-time homebuyers. But first, I want to give you a couple warnings. The first warning, this one comes from Zillow. These are red flags, people. Be careful. Now, look, Zillow is an awesome place to get information on homes, but when it comes to serving up realtors and lenders to you, they are straight up predatory. There's a lawsuit that's been filed against Zillow claiming that Zillow deceptively misleads buyers who click on the contact agent button who think they're getting connected with the listing agent, but instead you get connected to agents affiliated with Zillow through its Flex and Premier agent programs, and that results in inflating home purchase prices. Just what you want as a home buyer. Oh, I click this button and the type of agent I get means I have to pay more. The suit claims that consumers are directed to sign Zillow's touring agreement, which promises that the buyer's agent services are free. But it says that's deceptive and not true, because if the sale goes through, the buyer's agent, they still get a commission. And what happens is the Zillow affiliated Flex agent has to pay Zillow up to 40% of that commission. This cut of the commission that's paid to Zillow, that is for zero services rendered related to the sale, and it's never disclosed to the buyer or the seller. And the suit says that, of course, that incentivizes Zillow Flex agents to prioritize receiving as much of their commission as they can at all costs, even if the buyer loses the bidding process, because the Flex agents only effectively receive a 1% commission for the purchase of the home after they pay the hidden Zillow fees and commissions. So they have practically no flexibility in negotiating a lower commission. Homies, I could talk about this for hours. I've been watching Zillow for 20 years, and I'm not surprised by this at all. Not at all. When it comes to first-time homebuyers using Zillow, there's a golden rule. Look, but don't touch. The minute you start touching things at Zillow, you're going to get burned by a giant corporation trying to fleece the internet users who use their site. I tell people all the time, look at the business model of Zillow. What are they selling on their site? They're not selling anything on their site. So how do you think they're trying to figure out how to make money? By pushing you to people who pay to be there or pay them to be there who do not have your best interest in mind. One more red flag, because if you're here, you glutton for punishment, I think you'll appreciate this story. Don't believe everything that you see reported, especially when it comes from people on social media, even if they have a bajillion followers. Now, I'm not going to name this realtor, but she's blown up on the socials with her straight talking style. She's giving it to you straight. And she's gigantic. God bless her. Go for it. You're doing great. But this pissed me off. She was on a podcast talking about how big investors are renting back the American dream to us, noting that corporations now own 27% of the Atlanta housing market. Cool. I totally agree with this. It's not insurmountable for first-time home buyers. Maybe offer some ideas of what they could do. But, nationally, corporate landlords do own 3% of all the single-family home rentals. So, I don't love the clickbait of it, but the data is correct. And then she said this, quote, "They're telling you that you want to be a renter, that you don't want to deal with maintenance or ownership. But as a renter, you're at the mercy of the landlord. They could raise the rent or refuse to renew your lease. You're on a hamster wheel," unquote. But then she said what frightened her the most was the prospect of many members of younger generations never getting off the hamster wheel, that they could be trapped in a renting cycle forever and therefore unavailable and unable to build generational wealth through owning property. Yes, Cool. I love it. Here it comes. This red flag was too much for me. She said that the possibility of a renter nation scares the hell out of her. So she's trying to buy as much real estate as possible right now so her kids won't be stuck in a renting cycle. Wait, what? What? You're the social media real estate guru, and you're telling people the way to avoid this terrible rent cycle is to have mommy buy you your first home? Dude, where's the education? Homies, here's the warning. If someone's feed is full of outrageous statements, it's because clickbait and drama, they get all the views. So get your information from people offering solutions, not fear or drama. Now, of course, I'm saying that because that's what I do here, but this is the revolution. I am going to give you all this data and analysis a couple of times a year, but the rest of the time, I'm going to be dropping how-tos with education and empowerment, not clickbait. Okay, there, couple red flags. Just want to make sure that you are not getting sucked into some of those things. And moving on in the spirit of education with empathy for your frustration in the current market, let me offer some solutions besides, have mommy buy your home for you. Some opportunities for 2026. We already talked about condos, how they are in a place where buying them, most of the time, you're going to be in the driver's seat, which of course is awesome news for first-time homebuyers looking for affordable solutions to get off that hamster wheel ASAP so you can start earning wealth. If you're thinking about going to rent an apartment for the next 3, 5, even 7 years. I get it. A lot of people are like thinking, I'm just going to rent here for a few years. That's what I'm going to do. And, then eventually maybe I'll move out. Well, imagine the gains you could make with a lateral move into a comparable condo. I mean, don't be so stuck in the dream of the first home that you purchase being the forever home with the white picket fence. You could start with a stepping stone condo and you're going to accumulate wealth as a homeowner and you're going to be doing it all with a fixed payment. It might feel like, it's a lateral move similar to your apartment and it's the same living space as apartment dwelling, but the financial gains that you're going to make right there, they're immense. And you can use your gain piece that you get because you bought a home later on to make a bigger step when most people are maybe buying their first home at that point. So if you want to or need to live in a city, and you have dreams of moving to the suburbs, or maybe your dream is to buy the penthouse in some place. This is a strategy I've been preaching for 20 years. If every college student took this when they were a senior, a class on how to buy a condo in your 20s instead of renting, the average age of first-time homebuyers across the country, it would drop down to 25. The affordability crisis would be over. We'd be a nation of buyers who've got a game piece and can know that they can make their next move, leverage for their next purchase when they're 28, 30, 32 years old, and the middle class would be back. We'd have a level playing field. We'd be a nation of homeowners, not a nation of renters. And right now, 2026, great timing for you to do this condo purchase. Assad Khan, a senior economist at Redfin, he said this, quote, condo buyers can negotiate prices down and ask sellers for concessions, and they have a lot to choose from. Even though condo prices are still fairly high with HOA fees rising, condos are still more affordable than single-family homes. That's especially true for people planning to hold on to their condo for several years. Buyers may not have this much negotiating power for long, unquote. And if you're in a position where you want to look at a single-family home, there's opportunity for you as well as we get to the end here of 2025 and moving into 2026. Single-family homes, they're selling lower than they have for years in the fall. Homebuyers are scoring the biggest discounts in the fall season since 2019 as the market carries on at what they're calling a snail's pace. The typical home in September sold for 1.4% less than its final list price. That's the biggest discount in September in 6 years. All right, now, we've been going a long time at this point, but I'm going to go back to that paragraph I talked about earlier. Ready? Only 1/4 of homes sold above the list price in September, down from 28.5% in 2024. Did you catch that? 25% down from 28.5% sold above list price. That means deals. The average sale price to list price ratio was 98.6%. That means they're selling less, not overpaying $10,000, $20,000, $30,000. And home spending 50 days on the market, the slowest pace in 10 years. Choice, selection, choice. Boom. Love those numbers. And here are 10 buyer advantages happening at the end of this year. If you can figure out how to buy a home before the end of the year, there are tax advantages that happen by closing before December 31st. You can deduct mortgage interest, property taxes, and sometimes the points paid and reduce your taxable income for 2025. Second thing is mortgage rates at 6.3%. These are great, but what's really great to know is that if you've got a solid mortgage team, a strategic advisor, we know a lot of people who have been getting interest rates in the 5s for the last few months. 3, economic and tariff uncertainty. That could actually change things with lenders. That means the opportunity could be earlier here at the end of this year in 2026 because lenders may scrutinize applications later on a lot more closely. Number 4, inventory's up. We already talked about that, and we expect it to go more, which means more choice and less competition. Number 5, slower market statistics. They're great when you're negotiating. Because you can go, I'd like to buy, but boy, your house been on the market a little while. We're seeing prices go down. Then you can get seller credits. You can get mortgage interest rate buy downs. You can get closing cost credits. You can get credits to fix your repairs. And you can even get flexible occupancy, like if you need to move it earlier or later. Real estate's all about time and money. And if they're needing your money, you can do it based on your time. Or flip-flop that, do it vice versa. Number 6, the home builders, they're offering sick concessions right now. They need to get that inventory off the books. That's where they're going to give you those crazy low loan rates. They're going to give you closing cost credits. And they're going to give you upgrades. All that stuff that you go, it'd be great to have this extra stuff for the house, but it's an extra $25,000, $50,000 to get it. Now you can get the model home because they're going to pay for it. And if you want more information about buying a new home, check out episode 392 with a bunch of details on how to win big in home purchases. Number 7, advantages and opportunities for the end of the year. The holidays offer great opportunities to negotiate a really great deal while everyone else is waiting for the spring. If the seller's got the home on the market in the holidays, they really want to sell. Number 8, this one's interesting. Target stale listings. Look at a listing that's been on the market a while, especially look to see if maybe they were on the market and off the market and now they're back on. These are frustrated sellers, people who are desperate. Good time to go after it. Number 9, there are down payment assistance programs that are exclusively just for this year, for 2025. So check and see what's available in your area. There could be some stuff that you didn't know about that is ready to go for the end of the year. And number 10, prices are stable right now, but people are expecting a spring buying season. The buy low movement is right now. Real estate's cyclical. And for 65 years, we've seen that every spring and summer, we see about a 40% bump in real estate activity. Okay, that was the 10. I'm going to give you one more bonus opportunity for first-time home buyers that was just announced this summer. Paying your rent on time could help you get a mortgage after a key change with Fannie Mae and Freddie Mac, the nation's largest mortgage providers. They're thinking about using the Vantage Score. I've talked to you about this before. It's the Vantage Score credit rating, and that's going to assess your borrower credit worthiness instead of using the traditional FICO score. And this Vantage Score, it will take into account your rent history. It's also, if you actually have it monitored correctly, it's going to take a look at your utility and your telecom payments as well. I'm going to keep you posted on when this becomes official as the news breaks. So, damn, that was a lot. I got nothing left to say. If you want more, follow and subscribe to the podcast and the YouTube. You're insane for still being here. You can do this.
Looking for more DIY education or your own personal step-by-step guidance through the home buying journey? Since 2019, How to Buy a Home has been the #1 resource for first-time home buyers. So visit howtobuyaHome.com to get started.